All right, everybody, welcome back to Boca Raton and the Rule Natural Resources Investment Symposium. One of the biggest news that hit last year was the acquisition of the Hemlo Mine by people from what now is Hemlo Mining, which do trade on the TSX with HMMC and on the OTCQX with HMMCF. Obviously, the Hemlo Mine, a long-lasting stake in Canada's gold mining history and current trajectory, but it just seems to be going even further. Usually we have Jason Kosek on, CEO of the company, not present. I hear he's actually taking a well-deserved break, so we're pulling in the ringer here, Mr. John Awde, who, it's been a long time. You were on this podcast like years ago, I think, with when you were working on Dark Star?
Yeah, we did one Gold Standard and then one at Dakota Gold.
Yeah, oh yeah, that's right. Yeah, well, it's good to have you back on.
Appreciate being here.
Yeah, congratulations on, Hemlo. Obviously, that was months and months ago. That probably seems like years ago. But give us a sense of the exploration potential here, the trajectory. You just published a new mineral resource estimate here. It seems like everything's going exactly the way you guys wanted it to go.
Yeah, Trevor, when we acquired Hemlo, we saw a tremendous opportunity to expand the resource. It would just take time. We're drilling 130,000 meters this year. We've got 10 rigs that are active. Barrick did a really good job, but it was just an asset that was unloved. It was starved for capital and neglected. And we're putting $130 million into the business this year. Mm-hmm. We've ordered 21 pieces of new equipment. We've got the 130,000 meter program, a lot of development, some tweaks to the mill, and that's all happening this year. Interestingly enough, the reason why Jason and I and John Case are here is because of a phone call we got from Bob Quartermain in April of 2025 asking if we wanted to throw our names into a hat and build a team to bid for Hemlo. So Bob was there for 2 of the 3 discoveries in 1983 and 84. One of those zones has not been touched. Still there. We've started to offset that zone, and we're finding more mineralization. So there's a lot of low-hanging fruit, and I think one of the things that's most appealing for us is the ounces we're bringing in or converting are above the lowest point in the mine.
Oh, interesting.
Okay. So let that sink in for a minute. So there's a lot of potential at depth. There's a lot of potential laterally. But what we're doing, this 130,000 meters, is designed at conversion drilling and infill. It's a lot of brownfields drilling, all designed at going into a 2027 updated technical report, a new life of mine study.
Yeah.
Okay, so when we bought this, we said, okay, we want to go from 3,800 tons per day, which is about 135, 140,000 ounces, which is what the mine has been doing. We want to get to 6,000 tons per day in 2 years. So 6,000 tons per day is about 200,000 ounces of production a year. The mill can do 10,000 tons per day. Mm-hmm. So how we get from 6,000 to 10,000, we are doing, as a part of that updated 27 tech report, we are going to do an open pit trade-off study. So there's a significant resource in the open pit. It's about 2 million ounces. We're going to look at, do we incur the few $100 million in pre-capitalized stripping to do a layback, mm-hmm. or do we sterilize some of the ounces and bulk it from underground? So we'll see what that data tells us to do, and that's how we will go from 6,000 to somewhere close to 10,000 tons per day. 10,000 tons per day gets us to that 250,000 to 300,000 ounces a year, and we feel strongly that we can sustain that for a couple of decades.
Can we take a step back? And you mentioned getting the phone call from Mr. Quartermain. When you put 3 geologists in a room, you're going to get 30 different answers, right? Or ideas, right? But when you saw this opportunity in Hemlo, can you describe were you all on the same page of what the opportunity was, or did it take a little bit of convincing with the 3 of you? Kind of walk about the dynamics of what you saw, what you disagreed on, and maybe what you all agreed on.
Trevor, it's really the first deal I've ever been a principal of in my entire life, my entire career, where you had every aspect that was aligned. Every part of the deal was aligned, from Jason and Raphael and Eric and John Case, myself, Quartermain, to our financial advisor Scotia, to Orion Mine Finance, to Wheaton Precious Metals. We had the CEO of Scotia come down and be in the war room with us, which is incredibly rare. Wheaton wanted to have a stream on this asset. They wanted to have a win, in Canada. So we were all super aligned. We saw an asset that was built for 6,000 to 10,000 tons per day that was being underutilized infrastructure,
Right.
Neglected, starved for capital. It did not fit the description from Mark Bristow of a tier 1 or tier 2 asset, so 500,000 ounces or 350,000 ounces. We just saw so much low-hanging fruit. And then when you want to talk about exploration, so Jason is a structural geologist. Bob has made 7 or 8 commercial discoveries in his career. That's not even talking about the land package. So Barrick consolidated the land package prior to selling it. They call the Rocky Shore land package. So it's now 47,000 hectares. It's a big land package.
Yeah.
Now, admittedly, some of that's probably moose pasture. Probably not supposed to say that, but but there's some compelling targets on there. So just when you look at the brownfields, within a few hundred meters of the known resource, we're stepping out. We have new discovery. We're finding these sub-parallel zones in the footwall is 3, 4, 5 grams per ton.
Yeah.
So we have a lot of work to do just over the next couple of years within the mine.
Yeah. What it makes it, obviously, all your work in greenfield exploration makes this kind of look pretty easy for you. Is that true? Always true?
Look, exploration it's a process. There's science behind it, and I think you have to do it. You have to layer it and be very methodical and strategic about it. But ultimately, one of the things this whole group is really aligned with is, we're large shareholders. We put $40 million into the deal after tax dollars, and that's real money. That's American dollars, not Northern peso. Okay, and I can say that because I'm Canadian. We will let data dictate how we allocate capital, and that's really what makes this group unique and special. Is there's no egos involved. And that's rare for a company to have that.
Let's walk through this last mineral resource estimate you guys recently published. About 6 million ounces global right there between inferred, measured, and indicated. Where did mostly of the additional stuff come from? And then is there potential, you talked about moving the tonnage up over time here. Does that mean you get to potentially 10 million ounces at some point?
Yeah, look, I should probably have a disclaimer, but look, I think with the 130,000 meter program, what we're seeing, what we're hitting, the opportunity to have these sub-parallel zones, some of the resources that were not drilled off to the right, kind of spacing, we can easily see this thing being well through 10 million ounces over the next couple of years. Okay. Now, if we had 500,000 ounces, that would be a bit of an arm wave, but I think this is an iconic Canadian mine. It's 25 million ounces of gold that's been mined here. 17 million ounces was mined at an average gold price of $350.
Right.
Okay. So to say that we can look at doubling the resource and the endowment from what it's currently at, I don't think it's a stretch. It's just going to take time. For us to get there.
Yeah. Do you think there's an overhang on this story just because the Hemlo Mine's been around for so long?
So initially, there was, I think the only thing we had a bit of division on as a management team was what we were going to call it.
Okay.
And then I think a few of us were like, okay, well, Hemlo, that kind of limits us to just, because we don't want to be a single asset producer. We want to grow. We want to use this as a platform to grow.
Sure.
And I can't remember whether it was Quartermain or Jason said, well, Kirkland Lake was called Kirkland Lake, and they did Detour, and look at the success of that. So I think that was something that got resolved pretty quickly.
Yeah. I mean, I think everybody's familiar with the Hemlo Mine, but when you have new owners with the new aspiration, new ideas, that takes a lot of convincing, I guess you could say. But obviously you're showing it. The market's just kind of like, I don't know what the market is really expecting. It's also the gold market is what the gold market is. We dropped $800 in the gold price, and our pets' heads are falling off, type of thing, right?
Yeah, look, I would say that since we acquired the mine, we've changed out the GM, we phased out the contract miner. We took possession of the asset on November 26th. We phased out the contractor on March 15th. So we've only had the asset for 3.5 months as owner-operator, where we are making 100% of the decision to underground. We've paid down $75 million in debt. So right now our net debt is zero, with our cash in the bank and our debt. We've hired 75 people. We've initiated the 130,000 meter program. We've ordered 21 pieces of new equipment. Wow. We are hitting the ground running. And we're trying to achieve that balance of pushing as hard as we can, but safely. It sounds a bit of a contradictory statement.
Sure. Yeah.
But I would say that if you look at since January 1st, the GDXJ is down roughly 8%. We're up 14%, so we've outperformed the GDXJ. The gold price is down, I think, 8% this year, and again, we're up 14%. So while I would like the stock to be higher than it is, I think it's allowing people to, I'm going to establish a toehold. I want to see a couple of quarters of production. Mm-hmm. I think there are some people who maybe are looking at this and saying it's a bit of a show-me story. Yeah. Let's see some incremental progress. But I think those are saying, look, it's not a matter of like when you're going to get there or if you're going to get there. It's just when. Yeah, so our biggest challenge right now, Trevor, is hiring people. There are just years and years of under-enrollment in geology and engineering programs, right, and under-investment in exploration. So we're all competing for the same relatively small talent pool. Mm-hmm. So, training and education is really important. So our business plan is predicated on hiring another 100 people to get to that 6,000 tons per day over the next year and a half.
On the exploration side, other than the expansion, adding ounces, is there anything in there that you are like super excited about and can't wait to test?
Yeah, look, I've gone underground 4 or 5 times now, mm-hmm, and I don't want to say I fully know my way around yet, but there's just so much low-hanging fruit everywhere. Like we just discovered this A zone, and it was 8 meters, 16 grams. It's less than 100 meters from existing infrastructure, and it's totally open. This highway zone that we will likely rename the Quartermain zone, is at surface. It's going to be a couple of grams. There's a decline that goes within 200 meters of it. So I wouldn't say there's like 50 meters of 2 ounces yet, right, but there's a lot of economic, commercial mineralization that's within the brownfields footprint, within our infrastructure right now, that you can bring online at a lower cost. What I'm most excited about is getting to 6,000 tons per day, because then you'll realize economies of scale, you'll be able to ramp up and lower your costs. That's what I'm most excited about, because you look at, for us to go from 38 to 6 is one thing, and then 6 to 10 is another thing. We get this thing to 10,000 tons per day, this will be a top 10 gold mine in Canada, just outside of the top 5.
Yeah. So on your way to 10,000, is the equipment that you purchased, is that in preparation for that, or no, on the preparation for 6?
That's to get to 6.
Yeah, okay.
And then to get from 6 to 10, it'll be the results of that open pit trade-off study. Okay. Okay? Right. And
that's next year, 2027.
That'll get rolled into that 27 life of mine tech study. And then, again, we're agnostic in terms of, do we want to mine it via pit or underground? It's what the data says. Right. And we're about maximizing cash flow. So, we want to get to that level so we can start buying back our shares, put a dividend in place. Quartermain is really about pushing us for that dividend. Good. We want to exit 27 being debt-free and have an NCIB program in place, and potentially in the latter half of 27 having some kind of a novel dividend in place. Okay. Great aspirations. Love to hear that. Seems that is the theme of any producing company, generating cash flow. There a lot more companies are learning the lessons of mistakes in the past and taking a different route. And look, Trevor, as I said, we do not want to be a single asset company. There are definitely risks that are associated with being a single asset company. I mean, you feel when you have a problem, you feel it.
Yeah,
the market knows. So, but it's important for us to get over this hump, this capital intensive, couple of months, and then we will start looking at opportunities and be strategic, be opportunistic, and ideally North America.
So while we've been talking, and I've been thinking of this picture in the back of my head of something you said when we first started the conversation, but just the number of, I mean, without a better phrase to describe it, the number of big dogs involved in the Hemlo deal, right? I mean, you, Jason, Quartermain, Scotia, Orion, Mine Finance, Wheaton, the other people I just can't think of off the top of my head. I'm thinking like, if I walked into a room with all of you, I would probably keel in a corner and not know what to say.
I mean,
I'd be stumbling all over my words as I am right now.
John Case was one of the most successful fund managers for over a decade. He was number 2 in North America for like 3 years in a row. Jason Kosek is a total rock star. His energy is infectious. Eric Tremblay, our COO, built Canadian Malartic. Yeah. I don't need to say anything about Quartermain. He's in the Mining Hall of Fame. He's a legend. Jason Banducci, we brought on, Corp Dev IR. He's whippersnapper. We've got a great team. Raphael on VPX is fantastic. Scotia did a great job. I mean, this is a relationship-driven business.
Yeah.
Scotia has had a long-standing relationship with Barrick. And it was great for us to be able to have the benefit of collaborating with Orion and Wheaton on the due diligence.
Yeah.
When we went out there, Wheaton brought 6 people.
Wow.
But there was super alignment. I mean, we both approached the asset in a similar way. And again, I cannot emphasize how rare it is to get the timing right. I mean, we bought the asset. We thought gold was going to be higher in 1 to 3 years. We didn't think it would happen in 3 or 4 months.
Yeah.
But we were just super aligned with how to structure it, the business plan, aware of what the challenges and risks are. But as managers and owners of the business, we are risk mitigators.
Right.
So what I like about Hemlo is it's got a 40-year track record. So you know what your metallurgy is, you know what your geotech is, what your raw conditions are. And so for us to say we want to go from 140 to 200,000 ounces in phase 1, the mine produced 1 million ounces of gold 25 years ago in 1 year. It had many years of over 500,000 ounces of gold a year. So it's already done that. And we're in this inflationary period. We're building a mine right now.
Yeah.
Is very expensive. I mean, the replacement cost for us to go out and build Hemlo today, $2 billion, $2.5 billion, US.
Yeah. Well, sorry, go ahead.
And that's a real number. That's not like a fluffy PA number. That's like what it would actually cost. So, for us to spend like $130 million to get to that 6,000 tons per day, that's where the real free cash flow generation commences. The fact that we've been able to pay down $75 million in debt this year, again, I think just speaks to the asset. But as we said, 2026 is absolutely about investing in the business and laying a strong foundation, a platform for us to not only achieve the 6,000 or 10,000 tons per day, but to build Canada's next great gold producer.
Yeah. So the reason I was asking about the group involved was really the working dynamics of everybody. If you were to see this on a spreadsheet, you'd be like, in the back of my mind, like, this thing's big, too big to fail type of thing, because there's too many great people involved that if there's ever a problem, they will find a way to fix it. Serially successful people all around the board. And so, but it'd take a special project to get that to happen, right? This is not just an anything project. This is like one opportunity you strike when the iron's hot, and if it doesn't work, then it may never come in your lifetime.
Yeah, and again, I think just this business is about people, and it's about relationships.
And those relationships you all have built for how long have you been in it? 20 years?
Yep, and look, Quartermain is someone I've known for 16, 17 years. He's a friend, he's a mentor, he's been a business partner. Commercially, we're usually very, very aligned. And again, just two key principles that he taught me 15 years ago. Let data dictate how you allocate capital, and put the shareholder first. And those are his two principles that have guided him for 4.5 decades. We have a great team. I mean, are there teething issues? Absolutely. I was definitely concerned about burnout, because when we acquired the asset, when we won the process on September 10th, we had 4 people. We didn't have an office. We had Scotia's boardroom. And then John Case, our CFO, had the worst job from September 10th to the 26th, because we didn't have a finance team. We didn't have an IT team. And we were supposed to get off the Barrick TSA in 6 months. It took Orla and Discovery a year to get off the TSA. Okay? That's a massive undertaking. So, you built the team, got off the TSA, uplisted the TSX. I mean, it was a massive undertaking. There were times where people got a bit snippy because they hadn't slept in a few days. but no, it's a great group, and I'm honored and privileged to be a part of it.
Yeah. Well, I'm honored. I went over to the table, saw you, got to pick up a conversation, and said, let's just go record this because the people need to hear it. It's good to have you back on the podcast. Hopefully we can do it again. I'm not going to let Jason take all the airwaves next time.
I really appreciate the time. Thank you so much.
Yeah, it's good to see you. That's Executive Chairman of Hemlo Mining, Mr. Jonathan Awde. Hemlo Mining, again, trades on the TSX with HMMC and on the OTCQX with HMMCF. We've got more coming your way here from Boca Raton, so do stay tuned. The information presented should not be considered investment advice. Mining Stock Daily and its affiliates are not responsible for any loss arising from any investment decision in connection with the material presented herein. Please do your own research or speak with a licensed financial representative before making any investment decisions.